valuable company. Nvidia stock rose yesterday by 3.5%, giving it a total market value or market capitalization of $3.34 trillion US, more than Microsoft or Apple. It's a sign that the appetite among investors for stocks of companies in the artificial intelligence sector remains insatiable. Nvidia shares are up 174% this year alone. But there are skeptics, and our featured guest is in that camp. Let's welcome Ryan Bushell. He's president and portfolio manager of Newhaven Asset Management. Ryan, thanks a lot for being here.
Thanks for having me, Paul.
So you are not a AI investor in a big way. You're a dividend stock investor. What do you tell your clients as Nvidia marches ever higher?
That history doesn't repeat itself, but it does rhyme. We've seen this in the past. I think the most cogent example right now is that people are drawing it as to Cisco in 2000. And again, it's not that AI is not a thing. It's not that I'm a denier of that it's going to come and there's going to be implications positively and negatively for economies and markets and different companies. It's more just that typically when there is a nascent technology, there is a big spike in perceived demand. You're seeing that with Nvidia right now. They're oversold on their chip allocations. However, eventually all of this is going to have to be profitable, and right now it doesn't have to be. People are spending money to try to get ahead. That may last who knows how long, but ultimately it is a piece of equipment. Ultimately there will be competition. Ultimately there will be profits that will be squeezed, and it just cannot simply keep growing at this rate. So the share price is baking in, a level of growth that I would say is going to be very tough to achieve on a long-term basis.
We spoke yesterday to a portfolio manager also skeptical on Nvidia, and he characterized it from a valuation and share price point of view as everybody wants to own Nvidia. At some point, everybody will, and there won't be any buyers left. Do you see some logic in that reasoning?
Yeah, I mean that's kind of traditional law of large numbers kind of thought process, right? Or mean reversion. Both I think are valid. My thinking is really, again, $3.5 or $3.35 trillion is now invested in this company. This company does not have tangible or very little in the way of tangible assets. They don't even make the chips, right? They just design them. So it's not like they have a foundry or a fab or really even a plant. And so, there's definitely value in what they're doing. It's just a matter of how much of that is tangible, and when things get tougher, where will things net out? And so, to my clients, I say, this could keep going. Right now, a lot of what's going on now, I think, isn't even Nvidia's fault, or fault's the wrong word, but of their doing. You also have a U.S. government deficit that is seemingly out of control. The Congressional Budget Office yesterday came out and revised the deficit up from, I think, 1.5 trillion to 1.9 trillion. That's a big increase for intra-year, and no real plan or credible way that that's going to get sort of put back in the box, right? And so investors broadly are saying, there's $34 trillion of U.S. treasuries out there that are trading. Now over half of the treasury market is within a year of issuance, meaning it's a maturity of less than a year. People are not buying those and putting money to work there. They're putting money to work in anything else. Costco, for instance, is 55 times earnings right now. So you're just in a situation where it's hard to tell what any real value is. And so again, for my clients, I go, we know what we own, we know what they do, we know what their cash flows are, we know there's a residual value to these assets if the company were to ever be sold, and we'll take that as the middle road between bonds and the S&P 500, or that's dominated by tech stocks. That